How's it going, Savage Life family? I'm giving you another quick update today on CCIV since it did explode recently over $9 due to a count of news of institutional investors filing regulatory documents showing they own CCIV shares. Now, I'm going to go ahead and explain to you what that means and dive into the position I'm currently in, and as well as the contracts. If you hopped in on the contracts with me, I'm explaining how to go about this and what to expect in the future. So currently my position, I'm up with a total return of $3,200, 49%, with 200 shares at an average cost of $33.08. Okay, so more than 100 institutions filed documents showing they own CCIV shares. They collectively hold 80.8 million shares of CCIV SPAC, representing a stake of about 40%. The SPAC's top institutional investors are Sculptor Capital, HSBC Holdings, Periscope Capital, and Polar Asset Management Partners. Now, for institutional investors to invest a huge amount of money and to own 40% of this SPAC is very great news for a SPAC like this. It means they know something that we don't. They have insider information, of course, meaning we are getting very close to that merger. That means the merge is almost inevitable. That is going to happen. I'd say before, when the last update I made of this video, I'd say it was 80% that the merger was going to go through. Now it's almost certainty that it's a little roughly above 90% that the merger is going to go through. And if they're showing their regulatory documents, meaning that means that either they're trying to push the stock price up in order to create more funding and preparation for the merger, or the merger is right around the corner and they want to push the stock up either way. So this was a smart move by these institutions, and it is very great news for us investors in Churchill Capital. Now, I believe the merger news now is getting close, and by the end of this month we should hear those news. Now, buying at this level here is extremely dangerous, but if the merger news goes through, we now see the catalyst that has formed in Churchill Capital, and if it's sitting at $49 to $50 off of this news alone, people just want a certain indication that the merger is going to go through for money to be dove into Churchill Capital. So investors just want confirmation, meaning those who haven't hopped into CCIV yet. And once that confirmation goes through, we can see CCIV above this $80 price point level. So as far as my position, for those of you who did calls at this $40 and $45 strike price, now this market value here is going to just reflect of the money that you could have had if you did a call at a higher strike price, or if you did the call now expiring on the 19th, because of course CCIV flew past $40. So this is going to reflect on your portfolio, but it's not really what you're down. You're not down $1,155. It's just the potential profits that you could have made. What you are really up is a credit of $570, as well as a credit of $490, or whatever you did the strike price in the call at. Your credit is what you're currently up. So at the end of the day, you're profiting, whether you cancel your contract and sell your shares, or if you hold on to the contract and let the shares sell at this strike price here, which is what I'm going to do since there's only 3 days left of my contract. I'm just gonna go ahead and let it sell. At the end of the day, $3,000 overall profit is a great profit in only 2 weeks of waiting. So it depends what type of individual you are. Sometimes being greedy could turn around and bite you in the ass. So for those of you who want to exit your contract, I'm gonna go ahead and explain how it's done. Now, you have 100 shares. One contract is 100 shares. You want to go ahead and put one contract. The limit price is what the contract is being sold at. So instead of receiving a credit for this limit price, you're going to have to pay $890 to exit the contract. Now, you have a credit of $490, and that should already be in your buying power if you didn't already go ahead and throw it into other positions. But you're going to need $890 of buying power to enter this contract at the current price. Obviously, the limit price changes since there's massive volatility and fluctuation at the current moment. So depending on what's reflecting here depends on what you put for the limit price. Obviously, the lower, the cheaper the entry is. And once you review order, you want to go ahead and submit. And what that does is exit out your contract, freeing you up those 100 shares or the however amount of shares that you locked in on the contract, enabling you to sell at the price that it's at currently. Now, doing that, you would see your total return, and you'd have to calculate your total return, which is what you'd lose for exiting out the contract. But like I said, if you bought in when I explained to buy into the company beneath that $35 price point, you are absolutely at a profit at the current moment, and it's up to you to do so. But I want to go ahead and give you a heads up. If the merger does go through, this $50 price point level we're seeing here is quite laughable, and I could see it hitting $70 to $80 once that merger does go through. Now, if it doesn't dip below this $40 price point level by the 19th, by the time my contract expires, I'll go ahead, collect my profits, and buy back into CCIV to awaiting that confirmation, and maybe sell another call to further my profits. So there you have it for CCIV, a massive run up. Very great news for the company. I hope you guys are all profiting. I want to know, what is your current positions at the current moment? Let me know down below in the comment sections. Smash that like and subscribe. I'll be sure to catch you guys on the next update, which is probably going to be on the 19th for the CCIV, since my contract closes on the 19th. So I'll go ahead and see you guys then. See ya.